All right, good afternoon, everybody. Event Trader here, and we are going to go through and take a look at the week ahead. Before I do that, just to highlight, Brett's taking a look at answering some Q&A on his oil position here. The question was, would you hold the oil trade over the weekend if you'd still be in it? This depends on sizing. I would be if I was still in the position I had because it was in futures where I will have an active stop again by Sunday evening, and because I had it sized down at a swing position. So, that all plays into the position at the moment. But take a look at the 1503 if you are involved with Brett and that swing short in oil. All right, so we're going to take a look now at the week ahead and some of the notable items. Obviously, looking at my key themes, I posted this at 14:58 if anybody wants to follow along, and Scott will be on with us for the earnings part of it too. But Fed Day is obviously the big thing for next week. There's actually a lot of macro on the calendar. Not surprising given it's the end of the calendar month, which is pretty typical. Some big reports, of course, the PMIs and stuff like that. But let's take a look around with the Fed. Um, Everybody's looking for the 25 basis point cut. Fed funds futures still are at 100%. The 50 basis point cut crowd stands at about 19.4%. So I don't expect to see that. I do expect to see a hawkish dissent from Boston Fed President Rosengren. He's pretty much laid out his case there. The statement obviously will be closely followed, but the press conference for Mr. Powell will be key, because what we want to find out is whether or not this is a one and done cut or if this is the start of a larger cycle, and that's hopefully going to be maybe not established, because I'm sure there's going to be a lot of data dependency talk from the Fed, but at least we'll get a fair idea of where they stand. Certainly the durable orders number from Thursday and today's Q2 GDP number are going to really play into the idea that the Fed really doesn't need to move more than that 25 basis point cut. And we've got a couple other macro data that I'll run through here in a second that should help us determine which direction the Fed's going. But one thing to keep in mind, we're not getting the dot plot this time around. We're not getting the central tendency projections at all. So it's going to be a little bit more question marks around it, and certainly the upcoming Fed speak following that meeting will be of importance. And don't forget, we're not all that far away from Jackson Hole, which the Fed might use as a key intermeeting period time to try and lay out a case one way or the other for what direction they're trying to push the markets in. Also, keep in mind, the Bank of Japan and the Bank of England are meeting. The Bank of Japan will be out on Monday, and the Bank of England on Thursday. We had the ECB just last Thursday, and they didn't strike as dovish of a tone as was originally expected. So that raises the question on that divergence theme in the monetary policy theater that we want to answer. Next up, we got the China trade talks coming, and that's Treasury Secretary Steve Mnuchin, U.S. Trade Representative Robert Lighthizer out in China starting Monday. So watching for the headlines. I don't think this will be as big as the Fed decision, because to be honest, I don't think people are looking for a lot of progress here, but they certainly want to see it going in the right direction and having the two sides talking rather than a redo of the last time. If you recall, Lighthizer and Mnuchin were basically out for an afternoon and then they came back around. So I think people are looking for a little bit more meat, hopefully, but I don't think expectations are too high for this to really bear any big changes in the current trade talk theme. U.S. econ data, we talked about the Q2 GDP report and, of course, the durables numbers. Next week, ahead of the Fed, we'll get that personal income and spending and PCE number. Certainly, light inflation has been one of the worries for the Fed, so that PCE number will have particular interest. The morning of the Fed, we'll get the ADP number. Now, the last 7 to 8 months, the ADP number has been a pretty good predictor for the BLS number out on Friday. So given the fact that it's coming in front of the Fed, that could definitely have more weighting than usual. And after we get that Fed decision on Wednesday, we're going to get the PMI and ISM numbers on Thursday. And then Friday's a pretty busy morning. In addition to jobs, we'll also have the trade balance and factory orders numbers. Earnings, I'll go through that with Scott in a second here, but there's going to be plenty of them. Tech and energy going to be of particular interest, and then international macro. Everyone's looking for and hoping for a turnaround overseas, but there still remains a lot of calls for manufacturing recession, certainly in Germany, and weakness elsewhere. So starting with the China PMIs on Tuesday, Europe will also have a pretty big round of data with number Q2 GDP reports, some retail sales figures coming out, and of course their own PMIs as well as the PMIs from the America. The PMIs come out Wednesday night and Thursday morning, and then there's a number of European 10-year auctions next week too that should be of interest. Quick look through the U.S. macro. You can see all the highlighted items that I have there that we've already discussed. Also of interest, Democratic presidential debate is going to be going on, so we'll be keeping a focus on that. Not looking for anything game-changing to come out from there, but certainly going to be of interest for the markets to see who's starting to step up as the front runner to go up against President Trump in 2020. And then earnings I'll go through again with Scott in a second. The international, talked about the Bank of Japan, the PMI numbers. We got those retail sales figures from Europe as well, and Bank of England and Bank of Japan, of course. So busy week on the macro front to add to a lot of earnings. So it should be a fun week in terms of we're going to be getting a lot of potential macro numbers that could push around the indices, and then in between that we're going to have a lot of micro earnings reports that should lead to a volatile week and hopefully some trading opportunities. So with that, I'm going to bring Scott in here and we're going to start running through some of these earnings reports. Scott, you there?
I am here, Gav. How are you?
I'm doing good. Anything sticking out to you today?
It's definitely a mixed bunch a little bit. I mean, obviously we have a lot of strength across the board. It's good to see small caps and mid caps, just pacing the way higher today. This is very similar to what we saw happen on Wednesday with that breakout momentum in the MDY mid caps as well as the small caps IWM from their 3-week July ranges. Yesterday was a little bit of a concern because it was more of a trend day down fashion, and they retraced more than 50% of Wednesday's range. So it was almost like, wait a second, is this just kind of some sort of fake out move? What's going on here? But then now here we are. Finishing out the week here with a resumption back to the upside. So I'd like to give the benefit of the doubt of the bigger picture daily technicals that are there that look pretty darn constructive across the board in a lot of different major indices. Now the sectors themselves and the subsectors, we obviously have some significant laggards going on. We got some weakness in some big earnings movers. Amazon's trading down into the red today. Facebook is trading down into the red. Triple M, another one that's just been breaking down. Xilinx was another one. So you definitely have your handful of stocks that are not keeping up with the broader market. But that's what happens during earnings season. Some gap up, some gap down, some stay with the market and lead higher. Other ones, they basically fall behind and start lagging. And it's all about just recognizing that,
Yeah, and it's a theme that I pointed out last week in the Sentiment and Flow show, because one of the data points was that there had been 70 S&P names that had broken up 52-week highs and finished the week below at week lows, which certainly points to some buying fatigue out there, and we saw that continue to play out this week. So remains a very interesting environment out there. You don't agree with it?
I just don't like that statistic and stuff like that. Yeah, I told you that last week.
Yeah, but I mean, it's just a number of names that have done that. It's basically what you just said, and the trading philosophy that you tried with shorting Microsoft and Coca-Cola, just give it a number to it. So I don't see how that's a 14 times out of 15 this happened. I'm just saying 70 companies from the S&P did that.
Right, and I think that's where I cut you off. I said, as long as you give me the raw data itself, I'll make my own assumption and my own judgments. If you were to continue further and give me some statistic about how the market behave thereafter over the next week or two, well, then I don't like those types of statistics. I think they're very skewed, and they don't take into account a lot of other moving parts. They usually just looked at in a vacuum, and I just don't think that's the proper way to assess that raw data. So the raw data itself, yes, I will take any day of the week. Don't give me the statistic of what is supposed to happen.
Even if I was to tell you 10 times out of 10, you get pretty ornery anytime I bring up statistics.
Yeah, exactly.
All right, let's take a look at some of these earnings, Scott. First up, Monday morning on deck, Capital. Just keeping an eye on it because I know Robert Reed had written up a piece on World Acceptance, WRLD.
What's the ticker? I'm sorry.
ONDK, on deck Capital. And
you're showing the chart, right?
Yeah. Just keeping an eye on this. This one's been sliding lower. I know Trend has been involved with this, so I'm not sure how closely he's following it, but just wanted to throw it on people's decks because it's Monday morning, and just curious to see if we see any other faltering, because, it's like you say, Scott, I mean, I don't see the formula there for a big sell-off, but, these things start slowly and then start to manifest, and certainly there's plenty of concerns out there that if we saw sentiment change, you could start getting those selling going in. I haven't seen it. I don't expect to see it. I think that we're just in a little area of loose money that could get whipped around pretty easily. But if we start seeing a deterioration in credit for some of the consumers, perhaps that picks up, and that's why this on deck ONDK could be of interest. So not really as much interested about it on the stock side as much as I just want to put that on people's radar, because it's going to be out Monday morning. If you see a really negative number there, based around consumer credit, it could be something that starts chipping away at some of at the strength in this market here. Okay. So next up, Tower Semi. Obviously, Scott, you were just noting some of the reaction we've seen in the semi names. This is one that's bubbling up against that 18 and 19 range. If we're looking at it here on the daily chart, so just semiconductor name that's going to be out early. That I think be curious to see if it plays out into that false breakout, that theme that you've been talking about.
Yeah, Tower Semi. So obviously the space itself has been absolutely on fire here for the last 2 months, even more so in July, seeing lots of upside action in a lot of these semiconductor names. I think they are getting a little bit long in the tooth, extended to the upside here, so they're probably going to undergo some sort of pullback consolidation, but the relative strength is clearly outpacing here. For Tower Semi, that's TSEM. Yeah, I mean, this is a name that's clearly been an underperformer for about a year and a half now, and just started to, play catch up with the sector itself and getting back above the 200-day moving averages. But it's got a ton of resistance to battle through, so it's going to be either the earnings are going to be well received and they're going to continue to lift this stock back to the upside, or they're just going to keep it depressed and down low, below $20.
All right, next up, Beyond Meat, Scott. You had the call on this one. I think are you fully out, or are you just?
Yeah.
Where'd you get? Where was that from getting in the 150 area?
I got in twice here in July, and again, there wasn't anything major. The first position got in where is it? 150? No, actually, it was below that, I think. I have to go back. It was like it was early, right after the July 5th holiday. It was coming out of a tight little consolidation there where I got on board. I think it was 158. And then we rode it up to about that high there to about 174 about 4 days later. And then obviously I lock in partial profits when I started to see some weakness in a lower low. And then it just went sideways for the next 5 sessions. And then I said, you know what? This thing's breaking out again over this 175 area. And that happened on July 19th. And I said, we got to jump back in this thing. I said, just add to your position right now. It's a tight, narrow range. It's a wild stock. But you got to participate in this thing because this is like squeeze. If there's a definition of a stock that's squeezing shorts, this is a textbook definition, and over 25 years of being involved in the markets, I've seen my fair shares of names that tend to squeeze, and this one just was a textbook classic breakout there from narrow, tight ranges, and again, it's gone beyond my expectations, and as it goes up into new high ground, I'm just trimming and trailing the way up. But today's gap up on really no news and headline ahead of Monday's earnings. I figured, you know what, I'm better count my blessings and get the hell out of this one.
Yeah, I think we had it pegged pretty much ahead of its last earnings when we said that this is the next Tilray, and certainly playing out.
Yeah, for sure. And mind you, the stock only has about a 50 million float, give or take. I'm not sure how much is short. You're not going to get an accurate short float interest on this, not in such a short time frame here. But I would almost guarantee you that whatever the response is to earnings, I would say that this stock can easily be 100 points higher or 100 points lower in response to earnings. I know it sounds extreme, but given the low float and the hype and conditions around this, I think it could be 100 points up or down.
Yeah, I agree. It's going to be a pretty volatile name. Next up, we got Chegg Inc. That's CHGG, the direct-to-student learning platform. It's been one of the stronger stocks out there. It is showing a little bit of sign of fatigue around this 45 area. Want to have 40 and 45 on the radar here in case we see any sort of a breakdown. But you got any thoughts on Chegg?
Really strong performance as of late. I think it's part of our emerging growth focus list. It looks like the classic technical pattern where it's been on the rise, consolidated, breaking out, and it's in that same market cap structure with the really strong performance over the last year or so. It looks great. I mean, as long as this thing can stay above the 50-day moving averages around 39.40, it's still going to be viewed as a long-term uptrend growth name.
Okay, then next up we want to take a look at PI Impinj. It is, I think it's hold on, I gotta just double check this.
Hey Gav, real quick, it looks like Scalp Trader scratched out his Twitter position.
He's closing that out, not holding it over the weekend.
Yeah, alright, cool.
Okay, so Impinj, it's a platform that operates wireless connectivity for everyday items such as unique identification, location, authenticity to business and consumer applications. So a sign-in platform here, one of the cloud plays. It's been having a pretty nice run as of late, breaking above the 30 level ahead of earnings and running 237. This thing is up about 250% off the December lows. It's really been ripping higher since breaking its 200-day moving average. But again, one of those names that looks like they're going to have to really post a decent result in order to maintain these current gains. Otherwise, I could see a quick trip back down to 30.
Yeah, this stock had a rough year and a half, going all the way back to the mid-2017 peak of around $60, and then watching it sink all the way down to about $10. That's from 60 to 10. And then, to make a recovery effort like that is not going to be something quick. It's going to have to be very earnings driven. So each quarter where it showed some sort of improvement actually started to show up on the charts a little bit. Still some doubts, still lots of resistance, lots of people selling into the pops and whatnot who have been sitting with this. And finally, after that last earnings report, managed to start breaking out above fresh 52-week highs over that $25 mark, and has been having a steady run here. Pretty thinly traded stock, volume-wise and float-wise, so I don't really have too much of an opinion on it. It's only got about 20 million shares out there on the float, but we'll see how it responds. We'll watch it. I don't have any opinion at this point. It does look like it could be doing anything at once.
All right. Next up, we got NXP Semiconductor, the Dutch semi play that works in the radio frequency RF area and analog, which has been one of the hotter areas. This is a name that's been running into some resistance though at the 100 level. So curious to see if we could see a report good enough to get it through there.
Yeah, another name that's really struggled the last year and a half or so. Did find some support in late 2018 after cracking below the $70 mark. Made a decent recovery early on in the year, and then it's just kind of been chopping around the last 3 months or so. Not really keeping pace with the strong upside activity that we've seen in semiconductors, a little bit more choppier action. But, it's in a strong group, strong space. It's back above the key moving averages. It has potential. Let's see if it can stay above the $100 level going forward.
All right, then we are looking at one of the suppliers for the semiconductor space for the equipment, Sanmina Corporation. They, of course, provide integrated manufacturing solutions and components to the semiconductor space. This is one that, just taking a quick look at it, it's bounced off its 200-day moving average and is moving back up into the 30s and eyeing up the 34.50 area, which is where it was chopped down in May, failing to break out above that area. Had a strong Q4 earnings report that ripped it through the 200-day moving average, but it's basically been trading flat since that time frame. So looking for a pretty constructive chart going into the earnings. It's now through its 50-day and 200-day, and as I said, coming up into some pretty key resistance levels. So, you got any thoughts on Sanmina ahead of its earnings?
Yeah, it's shown some improvement over the last 2 months. Again, with the semiconductor space recovering off that May corrective move. So it's been just riding the coattails of some of the other leaders out there. Bigger picture, the stock has basically been locked into a 10-point range for about 2 years now, between $24 and $34. So I would really prefer to see it do something with that range. It is getting, obviously it's closer to 34 than it is 24, but again, bigger picture, it's just locked in a range, so I can't say too much about it.
All right, next up, Altria. They do have that Kronos M&A piece, so be curious to see, or investment piece I should say, so curious to see if they have anything to say there. But you got any thoughts on MO, Scott?
That's Altria, right?
Yeah.
Is that what you said, Altria?
Yeah,
Group?
Altria, MO.
Okay. Yeah. It's been a laggard, for sure. And I have problems, this with stocks that spend multiple months below their 200-day and 50-day moving averages, and this one it fits the bill for at least 2 years now off the 2017 highs. Yeah, it's made some rally attempts and grinds higher, but there is this big picture downtrend in play that it really it just kind of keeps me away from it.
Do you want me to mention COP, or should we just know that I think it's a short?
Let's just say this, I can put a blanket statement on the energy stocks. They've all been underperforming year to date, actually since longer than that, since the late 2018 timeframe. There are the only few exceptions that are out there, I think, is Chevron. CVX seems to be the only one that seems to be kind of trading in its own little world. And then recently, Oxy, I've noticed Oxy has been just stabilizing a little bit, which is interesting because I think aren't they supposed to be purchasing Endarco?
Yeah.
Is that going through? Is that official going through?
I think
they're
it's
waiting.
Official or not, but
yeah, that's otherwise. Just take a look at those main ETFs: the XLE, the OIH, and the XOP, which is XOP is really. It's really the one that I think everyone should be scared about because that's actually trading right back down near its December lows as I speak. So until I see some earnings, that are really kind of gapping to the upside and clearing resistance levels and moving higher, I'm going to kind of continue to go with the trend on these.
All right. Next up, we'll take a quick look at Corning. They, of course, do the display glassware for a lot of components. I believe that they're in the chemical XLB, aren't they, Scott?
I believe so, yeah.
So, curious to see how it responds from that aspect, but been trading in a nice sideways range with that 200-day sitting just below and that 35 resistance there. So this is one that could break out of this trading range.
Yeah, actually, it looks pretty good. I haven't really tracked it or traded it in a while. Um,
Yeah,
the
I've
nice
dabbled in it a little bit to the long side, but
Yeah, it seems to flip. It stalls off some of my it falls off some of my scans because I like to trade stocks that have an average true range or an average daily range of approximately 1 or higher, and this one sits closer between 50 and 75 cents. So it tends to kind of just not fit into my overall baskets of stocks that I tend to take a good look at. Um, but yeah, it looks good. I mean, just technically glancing at it, it's got that nice consolidation pattern off of the June rally, which is really strong. If this thing starts clearing 34s, you're looking at 35, 36, and then it's fresh 52-week highs above that. To the downside, $30 psychological level comes into play if it's a disappointing 10% gap in response to earnings. So we'll see.
all right, next up, Cummins CMI. This has been one of the stronger names. I remember when we were talking about this back at like that 128 level, Scott, and just completely missed out on that one. But nice little break above, of course, any failure. Too impressive, and we could see that 166 50-day average come into play, I would say. But nice strong name here.
Yeah, if anyone's looking for a quick and easy lesson in technical analysis, do yourself a favor. Go stretch this chart out to about 3 years, going all the way back to 2015. And all you have to do is look at a 200-day moving average. And you're going to see that from 2016 all the way up until early 2018, the stock was trading above the 200-day moving average with all the other key moving averages. Started a rollover, spent a couple months underneath it all throughout the end of 2018, suffering, lagging behind the market, and then started to turn things back up again here in early 2019, back above the 200-day moving average. This is a textbook example. It is not it's probably the closest thing to perfect of a 200-day moving average that you're going to get to. Do all stocks trade like this? Of course not. But it's examples like this that I've seen repeatedly over the years, which is why I say I try to avoid stocks in downtrends below the key moving averages for multiple months, and why I try to stay long stocks that are in uptrends above their key moving average for multiple months.
All right, next up, Global Payment GPN. We were talking a little bit about this with PayPal last week, Scott. Another one of those good-looking charts from the digital payment side.
Yeah, phenomenal, steady, consistent uptrend year to date. You can't argue with those. You just can't argue with them until they break. You can't argue with them. And I don't see this thing breaking anytime soon. If it does have earnings, it's really going to have to collapse, erase all of July's gains, and break below the 50-day moving average around 159, and then continue to break it lower. So.
All right. Next up, Grubhub, GRUB. I know we've discussed this one on the short radar. 90 million float and about 19% short, so it's not like that's a brand new idea. But you got any thoughts on Grubhub?
Yeah, that 200-day moving average rule that I have. Same example here. Span out 3 years, look at it, and then you'll see that when this broke down late 2018 and failed to recover above the 50s and everything else, it's just been a laggard significantly year to date. Just recently decided to start catching up with the market here, June and July. It's that rising tide lifts all boats type of scenario. But this thing's got to get back above the 200-day moving averages around that $80 mark if there's going to be any sort of recovery effort back to the, who knows where it's going to go. But it's got to get back above the 200-day moving averages for me to get interested.
All right, next up, just quick note, Intelsat is reporting. Again, it's all about the selling of that bandwidth that they have. So not overly concerned with the earnings, but I'll address it when it comes out. And stock's looking a little bit better these days. But let's take a look on the credit card side here with MasterCard. MA, of course, getting ready to report. We've seen decent earnings from a lot of these credit card companies, but been having a tough time finding buyers above the current levels. So I'll be watching MasterCard to see how that plays out.
Yeah, super strong uptrend. It reminds me of Global Payments. There's nothing else to say about it. It's been consistently strong all year long, along with Visa. And then just recently, mind you, Uh, Discover Financial, DFS, that had a monster breakout this week from a long-term, what was it, about a 2 or 3 year resistance level that was in play there.
Yeah.
Yeah, it was about a year and a half resistance level in play there at the $80 mark that this thing just rocketed through. And then Capital One was another one that was just in this tight consolidation for about, I don't know, 3 months or so. It's not new all-time highs for Capital One, but it did break. Not only did it break above the 3-month consolidation, it broke the year-and-a-half long downtrend that's been in play there off the 2018 highs. So just good price structure overall in the group. These are already reported, right, Gav? They reported a couple weeks ago, right?
Yeah.
Yeah. Doesn't look, I can't remember when, but it doesn't look like there was anything disruptive on the gapping side. So we'll see how MasterCard does. Maybe MasterCard slows the momentum down. Maybe it doesn't. American Express had an initial poor reaction, and they just bought it up soon thereafter, so that wasn't really much of an event there either. Perhaps MasterCard acts the same way. We'll see.
Okay, next up, Procter & Gamble, arguably the best staples performer out there over the last couple of months. Just a strong-looking chart that keeps going up.
Yeah, exactly. Can't say anything. Couldn't have said it better myself.
Next up, Under Armour, UAA. So we have this name. We've seen good performing retailers rewarded, and Under Armour's certainly been one of those names breaking above the 23 level after a pretty long sideways trading pattern there from 20 to 23 for most of late 2017 and 2018. But seen anything in UAA that's piquing your interest, Scott?
No, but this is one that I've always said I should just buy and put away in my long-term, never look at it, buy and hold type of mentality. I really dislike the fact that they split that company in two for whatever reasons. But recently, yeah, this is looking pretty solid with that breakout back above that 24, 25 resistance area. You do have a bigger picture downtrend all the way from 2015, mind you. I think that's when they pretty much split the company up too, if I had to guess. But 2015 for the last 4 years or so, that downtrend finally is being broken here this year. So this could be a major turnaround play and become a better longer-term investment. But we'll see.
All right, next up, we'll take a look at AMD Advanced Micro Devices, one of the hotter semi-plays over the last couple of months here. Watching to see any sort of hint that they're stealing market share from Intel or NVIDIA, but should be one of the more interesting names as it tries to break out above this 32 area ahead of earnings.
I've heard that they were stealing market share from Intel since 1997. I've heard that. It just seems like that's always their angle that I hear when people buy this stock. It's been a stellar performer over the last 3 years or so. It seems to go through these ebbs and flows in the market where it's left for dead and nobody wants it, and then it starts to supposedly take market share away from Intel and then just starts rocketing to the upside. But if you look at a long-term chart of this thing, you can basically pinpoint exactly the story and when it happens and then when it fades out. So the nature of this stock is that it eventually, these aggressive upside movements when everybody's loving it, does stall out. So it hasn't done that yet. It still has that potential to break out above multi-month resistance along 34, 35. I am still swing long a position of this. I've actually bought this one back in May because if you look at what semiconductors did during May, mostly because of Intel and that whole Huawei thing that was going on there, AMD held in there like a rock right along the 50-day moving averages. And once the market started to recover late May and early June, this was a no-brainer to jump on board at that $27, $28 area for that continued upside there. So I still hold a very small position, like I said. I got plenty of cushion, over a 10% cushion to deal with if things go a little adverse against me, so I'm fine with it. But yeah, that's it. So it looks good.
All right, Apple. Obviously, a name that everyone's going to be watching, looking to see how that slowdown in China continues to persist. Going to be one of the more interesting names. Obviously, we've got all their suppliers out, too, that we're going to want to watch. But what's your thoughts on Apple here at 208?
It's grinding. It's a grinding stock the last couple of weeks, so I can't say much about it. It's just been steadily holding its gains and not seeing a lot of downside activity. I can go either way. We all know earnings reports from Apple and whatnot can go either way. So I think the big thing is always that I hear these days is, well, what's next for them? What's the next big thing that they're going to be coming out with to be their revenue maker? So we'll see. We'll have to see how that plays out.
Okay, next up then we will take a look at EA, gaming stock. This one, it's been a bit of a wild ride for the gamers the last couple of months, quarters really, but a bit of a downward trend that it hasn't been able to get out. Now it's below all its key moving averages.
Yep, exactly. I was going to say the same exact thing. It has to prove itself. And I wouldn't even touch this one until it started getting back above $100. Right now, it's looking like path of least resistance is to the downside below 90. So.
Okay. Moving to Wednesday, we got American Tower, AMT, name that I got out of. Didn't like the price action that was going on around this 200 level. You got any thoughts from a technical side on AMT, Scott?
Really strong momentum name. You nailed it a year ago. Back, where were you? 150, 125? I can't remember where you got in.
I got in at 135.
Yeah, you absolutely nailed that one. Just a steady winner here. Great gains. It's still, I could see why, you look at the price action here the last couple of weeks. It's not keeping up with the broader market and whatnot above that 200 level. It's testing the 50-day moving averages. It's a hit or miss from here. You want it to, if you're still long it, you really want it to stay above 200. If not, then it maybe can go through some sort of corrective phase, maybe down to the 200-day moving averages around 185.
All right, let's talk General Electric, Scott. You seeing anything?
That's still around, that company?
It is. I'm really curious to see it play out, but you see anything from a technical perspective on a longer-term chart? Looks for on a weekly to be, basing, trying to get through. It's certainly basing.
Yeah, that's all it's doing. It's out of favor, out of sight, out of mind. Nobody likes it anymore. If you're long this one, you're hoping that there's some sort of massive turnaround in the works here, whether they're selling off assets or whether they're fixing the company or changing management. You're playing this one for a long-term, and I'll repeat that, long-term turnaround. But right now, it's got a lot to prove here. It's just consolidating the last 6 months. We'll see.
Spotify. This is actually making a nice little run above its 200-day moving average. You got it. I know you've always hated this one, business model-wise, but the chart looks to be enticing.
Well, I hated it because I was around when Pandora became public, and that thing was okay, and then it just took a dive and absolutely collapsed. And then I believe Pandora got bought out by somebody. It's not trading these days, right?
Yeah.
Anyway, sorry about that. But yeah, Spotify, I mean, it was pretty much the same, somewhat of the same, but they require subscriptions, etc. I hear it's better. I'm not cool enough to know, but it has been recently, and I was negative on it because it was trading below the 200-day moving averages and in that massive downtrend. But recently here in June, it's gone back above the 200-day moving averages, back above the 50. It seems to be a little sluggish around $150, $155. So I might have to change my tune if this thing starts trading further and start climbing higher above 160. But right now it's just kind of a no man's land for me.
All right. Next up, Qualcomm, QCOM. There's obviously a lot of legal litigation going on behind this one that makes it a little tougher to
and not cleared
judge,
up.
But what's that?
Is that stuff not cleared up? I thought they got dismissed and everything else, right?
No, but then there's another junction put on them, I believe. So it still is out there.
Yeah, right off the bat, that keeps me away from it. I don't play that game. Not for me. Sorry.
Okay, Twilio. I believe you played long in Twilio today.
I did.
So what's your thoughts on Twilio ahead of it?
I took a starter position here today. looking for maybe get a little bit of a pre-earnings pop ahead of Wednesday's earnings. We're going into month end. So I'm thinking maybe if we get some window dressing and we get some of that, juicing in the markets next week, maybe I can squeeze a few points out of it over 150. That's it. I'm not going to be holding into earnings. Way too wild of a stock to do so. Probably not going to add. Just playing it for a few points if I can eke it out of it. But yeah, that's it. It looks
All
strong.
right,
It's one of the strongest software names out there with everything else in that
West,
space.
okay, next up, Western Digital, WDC.
Yeah.
Obviously there's concern around the storage space, but this one is attempting to break back above that 55 level, and it's above the 200. Another good-looking chart here.
Yeah, Micron and WDC just rocketed in June and July here. Massive gains off of their corrective moves from May. Yeah, there's nothing. I mean, that's all you need to know is that these things got heavily, heavily bought up the last few weeks, and despite the 2 years of downtrending action below their 200-day moving averages, etc., and falling out of favor, it just got a heck of a recovery here. So they're potential turnaround plays. I'll keep them on the radar and see if there's an opportunity setting up after earnings.
All right, next up then we want to take a look at DuPont DD as that tries to find a little bit of a base. The chemical space has been one of the poor performers. You got any interest in DD?
Not particularly. Again, underneath all the key moving averages, it spun off, the other company, what was it, DWDP for a while there. There was a big mess going on. They changed their names, Dow Chemical, DuPont, there was other stuff. It just became a mess of a chart. I've been avoiding that whole shabacle.
Okay, then we'll take a look at Shopify, SHOP. Another one of the cloud plays here on the e-com front. This thing's just been straight up.
Yeah, monster stock. It's been on the focus lists for year to date, just as a leading software cloud play. Even when it pulls back in, for a while, it just gets bought right up and continues to grind its way higher. So I can't argue with the trend until it changes.
Okay, recent IPO Yeti, back up towards those post-IPO highs in that 36 area. Curious to see if the fundamentals are going to live up to the way it's trading and the valuation.
Yeah, they're still expensive coolers. So whether you believe in that or not, it's the same thing with Beyond Meat. It doesn't really matter whether you think it's overvalued or whether the product is any good or not. It's all about the supply and demand of price action. I was trying to short this thing back in June as it got rejected along the $30 mark around the 50-day moving averages. A week later, going into the 4th of July holiday, this thing breaks out above 30. I covered it, but I said on audio, hey, this stock is breaking out, it's squeezing. I'm not going to reverse my position and get long, but if anybody's looking for the breakout, this is the time to get in. And if you picked it up at 30, you're sitting pretty here in July with a nice little gain. So it's got new all-time highs just right above this week's highs at that 37 mark.
Yeah,
well, that's it. It's looking good.
All right, First Solar, I'm staying with my long going into earnings. Channel checks are looking pretty good on it. You got any thoughts on the chart?
No, I like the solar sector. Looks great.
Okay, Square SQ, another payment provider. We've been talking about this. It's coming up to a pretty key level here, right around this 82 to 84 level. It needs to get through. Good round of results should help boost it and perhaps get it back towards that 100 level that we saw it trading at in August. But one of the weaker performing payment providers so far.
Yeah, but this was a hot stock in 2017 and 2018, and then it's basically took a year off, you can say, or at least 9 months off, just to consolidate, go through a corrective phase. I mean, this thing breaks out over this 83, 85 area. I mean, you were looking at a whole new leg higher on a monthly chart, so I like this one. It's definitely on my radar.
All right, Scott, I think that's going to do it for us then. I mean, there'll a lot more, a lot of other notable names, Chevron and XOM out on Friday, as well as
US Steel
and stuff.
Yeah.
US Steel still to come.
General Motors.
Yeah,
we got Verizon.
Yeah, we'll get into all those, but I think we covered the big ones that I wanted to take a look at. So, again, on a daily basis, we'll be looking at all these and getting a little bit deeper into the sticks on them.
Sounds great, Gavin.
All right. Well, Scott, I think that's going to do it for me over here. We
Okay.
are going to post a recording of this for people. Hopefully, it comes in handy over the weekend, and we will talk to everybody soon.
All right, great.
All right,
Thanks, guys.
Scott, you have a great one, man.
Too. Bye.
All right.